Today, I'm taking a bullish look into Uber and giving you 4 big reasons why it might be one of the most compelling growth stories out there, especially since the stock is down over 25% from its all-time highs. Whether you're a long-term believer or new to the name, these points just might persuade you to look into Uber stock like there's no tomorrow. And at the end, I'll share my thoughts if I'm buying any Uber, so make sure to watch all the way through. But first, make sure to hit the thumbs up and subscribe button and check out my pinned comment for special offers at fool.com/Jose and a link to my daily semiconductor newsletter.
I want to thank the Motley Fool for sponsoring this video and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Well, first, let's start off with reason 1, and it's the dominant platform with multiple growth verticals. When people think of Uber, most still picture ride-hailing, that magical moment when you tap on your phone and the car shows up. But today's Uber is so much more than that. Yes, the mobility segment, the original ride-hailing, is still a juggernaut, and it's benefiting massively as we all return to our normal routines post-pandemic. More events, travel, and commuting means more rides. That's great, but mobility is just one piece of the puzzle. Another powerhouse is Uber's delivery segment, which includes Uber Eats. What was once seen as a pandemic-fueled frenzy is showing surprising staying power. People got comfortable with the convenience of delivery, restaurant meals, groceries, convenience items, and they're not willing to give it up. Uber has leveraged this behavior shift, steadily growing its delivery business, so it's become the second major revenue driver. And it's not just delivering takeout anymore. Groceries, flowers, pet supplies, and retail products are all part of the equation. The more categories Uber can fold into its ecosystems, the more stickiness it creates. Then we have freight. It's easy to overlook this segment because it doesn't directly touch you as a consumer. But think about it. Freight is basically Uber's technology layered on top of the logistic world. By matching shippers and carriers efficiently, Uber brings transparency and speed to a traditionally complicated industry. As supply chains modernize and companies seek more flexible logistics solutions, Uber Freight stands ready. Sure, this part of the business is more volatile during certain cycles, but over the long term, digitizing freight is massive opportunity. The net effect, Uber is assembling a true platform ecosystem, mobility, delivery, trucking, and who knows what else tomorrow. These verticals feed into another, creating cross-selling opportunities and allow Uber to spread its fixed costs over a wider revenue base. Over time, this multi-vertical approach could strengthen Uber's moat and make it harder for competitors to chip away at its lead. Now, reason number 2, and that's the untapped markets and global expansion. Uber started in big cities like New York and San Francisco, then expanded across the United States and into major cities worldwide. But what about suburban and rural areas that have historically been harder to serve due to lower density? As Uber refines its pricing algorithm, adds more local drivers, and introduces cost-effective options like shared rides, two-wheelers, and even bus or train integrations, it can crack into these less dense markets, and that's a huge growth lever. It's not just a geographical story with developed markets, it's deeply embedded in Latin America, Europe, the Middle East, and parts of Asia. In many of these places, Uber is synonymous with on-demand transportation. Plus, in some emerging markets, people skipped the whole personal car ownership model and went straight to ride-sharing. As incomes rise and smartphone adoption becomes universal, Uber stands to gain entire new user base who aren't just first-time car owners, they're first-time Uber users. Then add delivery to the mix. While some people assume food delivery is fully mature category, that's just not true globally. There are countless international markets where food delivery is still in its infancy, and Uber is working hard to partner with local restaurants and groceries to gain shares. In the end, global expansion is not just about rides and more orders. It's about becoming the daily utility in people's life. If Uber can establish itself as a trusted brand, used multiple times per week, you can bet that the top and bottom lines will follow. Now, number 3 is the pathway to autonomous vehicles and efficiency gains. We all know that autonomous vehicles has been a hot topic for years. The hype cycle has seen peaks and troughs, but the end game remains enticing. If Uber can eventually tap into a substantial network of driverless cars, the economic shifts dramatically. Without needing to pay drivers, Uber's cost base shrinks, margins expand, and price to consumers could drop, creating a virtuous cycle. Lower prices drive more demand drives more scale helps justify the upfront cost of autonomous vehicle deployment. Now you might say autonomous cars still feel far off. True, it's not like tomorrow or every Uber will be driverless, but consider this. Uber isn't trying to build its own autonomous vehicle tech from scratch anymore. Instead, it's forming partnerships with companies specializing in autonomous driving. Waymo, for instance, or other tech partners who have invested heavily in sensors, AI, and self-driving software. Uber brings the network of consumers, data, and mapping capabilities, while its partners bring the AV know-how. Together, they can roll out AVs city by city, starting small and expanding as regulations and technology allowed. Step towards partial autonomy or more efficient routing can still improve the business. Efficiency matters. Every algorithm improvement in matching riders with drivers or optimizing delivery routes, often powered by advanced machine learnings, lower cost and raises service quality. Over time, these incremental efficiencies gains can add up to sizable improvements in margins, bringing Uber closer to stable, robust profitability. Now, the final reason, surprising profitability and cash flow momentum. Let's talk numbers. For a long time, Uber carried a reputation as a money-losing machine. It poured billions into growth, subsidies, and global expansions. Many skeptics said it would never be profitable, but guess what? Uber has started proving the doubters wrong. In recent quarters, Uber posted GAAP operating income that pleasantly surprised investors. Adjusted EBITDA has soared and the company has begun generating meaningful free cash flow. This isn't a fluke. It's a result of cost discipline, improved take rate, and better marketplace balancing. When companies hit a certain scale, fixed costs start to amortize over a huge revenue base. Uber scale is massive, billions of trips per quarter, and each incremental improvement in efficiency flows straight to the bottom line. As Uber's advertisement business grows, the company can earn high-margin dollars from placing ads in front of millions of people opening its apps daily. Meanwhile, increasing membership with Uber One drives loyalty and repeat usage. All these factors combined mean that Uber's revenue growth no longer just buys growth. It increasingly buys actual earnings. Profitability changes the narrative. It means Uber can internally fund its own expansions. It means less dilutions from issuing stocks. It means the company can consider buybacks, dividends, or reinvesting in next-generation products, and it lowers the investment risk. If Uber can sustain positive cash flow, it becomes far less vulnerable to economic downturns or investor sentiment swings. Of course, it is important that no investment is guaranteed. Uber faces a lot of competition. And the main purpose of this episode was to look at the bullish cases. But remember, there's things like competition, regulatory hurdles, and technology challenges. But if you believe in the future of on-demand services, mobility, and the consolidation of local commerce onto a single platform, Uber has the unique vantage points. Uber already is changing how we move, eat, and get things done. The company is large globally and is still growing. With profitability and cash flow now part of the picture, it's clear Uber has grown past that scrappy startup phase and is becoming a digital infrastructure provider. So if you're looking for a high growth, high potential stock that is proving it can manage both top line expectations and bottom line improvements, Uber might just be your best bet. Now, I do want to share my overall thoughts. So like I mentioned at the beginning of this episode, I really just wanted to look at the bullish cases. Now, what I want to do is in further episodes, maybe look at more of the bearish cases. So at the moment, I personally am not buying into the stock, but after doing this research, I do believe there's a lot of reasons to continue to go to the next step. But as of now, I'm still going through my research process. So I hope you guys enjoyed today's episode and let me know in the comments below what are some of the bearish takes that you have on Uber. And did I kind of surprise you with some of the bullish takes we saw today? Peace out and take care.